Good morning, everyone. Mike and Corey here. Got some more tariffs in the news, so we'll see what the market's doing with that. But we're hearing Amazon tariffs, Temu tariffs, and then tariffs getting mentioned in earnings calls. And we'll just see. Remember, it was only, I don't know, 3-4 weeks ago when this stuff really started to accelerate. We saw the market sell off back then, so we'll see what it's doing today. This is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So here, I'm going to start off with the big headline that I saw first, which is kind of exciting. The White House blasts Amazon over what they want to do is Amazon on their, I can't remember what they call it. It's like their low cost or some kind of subset of their product. They want to include the tariff like as part of the pricing. So to say, hey, this is $5, but with the tariff, it's $7, whatever the numbers are. And the White House did not hesitate, but to say this is like a hostile and political act. And initially, Amazon sold off by a couple percent. As I dug into this a little further, it's not on all of their products they were looking at doing it. I'm trying to find out what the section is there. It's called the ultra low cost Amazon Haul Store. So I don't even know what that is. I shop on Amazon all the time myself, and I don't know what the Haul Store is. Maybe I need to look up and find some good deals. But when I first heard this, I mean, this is big enough that the Bessent and the press secretary Levitt are speaking out against it. So Corey, what's your initial reaction? Other than Amazon was off 2%, but they're only down 0.6% now. What do you think this is a hostile and political act?
Well, I want to hit what the reporter said to who asked.
Okay.
They said, they asked Scott Bessent, so Treasury Secretary Scott Bessent, is this a crystal clear demonstration that it's the American consumer who's paying for these tariff policies? And I think that really ruffled the feathers there. Do I think Amazon, this is a hostile and political act? I do. They're trying to send a message. I don't know how hostile it is, but someone made a point. Why don't they include their profit margins on things too if they really want to be transparent? And it's like, okay, yeah, if you're going to be transparent, where does it stop? So I don't know, man. It's certainly the White House is getting pushback on these policies.
Well, I will say, as an owner of Amazon stock that's in our models, Corey and I own a piece of Amazon. Like when you look at their website, we probably own 6 pixels up in the right-hand corner. That's our piece of Amazon. But I would not do this. Come on. I don't know that it's a hostile and political act, but if you want to get on the bad side of Trump, doing things like this, not smart. They don't cover the taxes that you already. Well, actually, they do cover sales tax, but there was tariffs before. Just so you know, it's not like there was never any tariffs. Why aren't they covering inflation? Why don't they cover this, that? And then, I mean, honestly, they're only doing it on a little tiny part of their products, but even then, the headline is bigger than that. So it's like it's not all things like. Plus, if I bought a book from a warehouse, is one day this book doesn't have a tariff on it, and 2 weeks later it does. Complicated, and I wouldn't do this. Now, Amazon initially sold off a little bit. It's come back, but this is the kind of thing, especially as tariffs come and go. I mean, you'd be updating your website all day long with this kind of stuff. So that's one thing, and that leads right into the other thing, which if you are a shopper of Temu, which is clearly a Chinese e-tailer, is what it's listed. They're adding import charges. So, and this is where I'm almost like, fine, Temu, you're a Chinese, Amazon I think of as an American company. Temu is the Chinese side of it. And my kids have bought stuff off of Temu. I have never personally bought anything off Temu that I know of. I know there was a while these orange packages would show up in my house and there'd be like, I don't know, junky stuff to me. But anyways, now when I scroll through here, now here's the impact on this. So if you bought a child's bathing suit for $12.44, it now costs $31.12. So you got your 150% surcharge on there. And I think this is where it's interesting, because I'll tell you that just yesterday my daughter asked about buying a bathing suit at Target, and I said sure. How much does it cost? And it was, I think she said $30. I don't remember exactly. But it's kind of like you're seeing where China undercuts that price, although the one that's sitting in Target, it could be made in China for all I know. But it's just interesting to see how this plays out. Also, Temu and Shine, we've done articles before on them where they took advantage of the de minimis tax exemption, so they weren't paying taxes already, and they're basically going to get squeezed right here. So, Corey, you ever buy from Temu or Shine? I guess you pronounce it.
Yeah, I never have. Not me.
Well, then you have not purchased a bunch of junk, in my opinion. So, anyways, I fully expect these companies are going to struggle with it, assuming that the Chinese 145% tariff gets put into place. So, how's the market reacting? All this, tariff headlines in the news. Remember last time the market sold off? Oh, it's up. The market is up. S&P's up 0.27%. If it stays in the green, this will be the sixth day in a row for the S&P, which is a nice long streak. So I do think we're getting some tariff fatigue. So, what was new news a month ago is getting boring. I'm not saying it doesn't affect us, but, as far as the market's, quick reaction to it, it's kind of priced in. We're by no means through all this tariff discussions and negotiations, but I just think the market's getting kind of like, okay, we got this figured out. It's this going to happen. Things are going to get negotiated and delayed. We're not going to sell off every time somebody has a problem with tariffs. So with that, I know, Corey, you've been following the earnings calls. So why don't you tell us what you're hearing on tariffs within the earnings calls?
Absolutely. Yeah. And we've got an earnings blitz this week. I'll be on top of that. I'm really not going to be doing deep dives. Well, I'll be doing deep dives, but on our show, I'm not going to be doing deep dives for what I provide. We're just going to be kind of looking at what are these companies saying as a result of the tariff environment and this sort of dynamic environment that we're all in. And no one more so than these companies. So here we go. This morning, Coca-Cola earnings met expectations. Obviously, you can maybe see at the top that revenues did decline a little bit, but that was priced in. That was expected. Let's go to down at the bottom, we got their full year guidance. Here we go. Top two lines. Based on the current macro environment, the company is providing the following full year guidance. The company expects to deliver organic revenue growth of 5 to 6%, and they say no update to guidance. Part of that is in that last paragraph, the company's operations are primarily local. So they kind of don't get as exposed to the tariffs, but they think they can adapt to what tariffs they are exposed to. So there you go. Coca-Cola, no change. Pfizer, they're doing cost cutting. They still have some lag from the kind of COVID revenue runoff and all of that. So that's all fine. Now at the bottom there, they maintain their guidance. They say, yep, we're going to meet what we have said prior. But also, our guidance does not currently include any potential impact related to future tariffs and trade policy changes, which we are unable to predict. So they're saying, yeah, if that stuff is in place, it'll affect us, but we're not going to price any of that in to our guidance because we're just kind of thinking that it'll go away. So I like the optimism. I like it. Hopefully it's true.
Yes, definitely.
Okay, here we go. Here's a little blitz. So Honeywell is an industrial conglomerate. They're actually going through the process of splitting into 3 companies. Interesting to read about. Honeywell expressed caution. Oh, and they're kind of following the footsteps. You had GE break up into 3 companies recently. Raytheon broke up into 3 companies, a little more defense tied, but also industrial tied. And 3M did the same thing. 3M split up too. I think they might have only split into 2 companies though. So Honeywell said, hey, everybody else is doing it. Why not us? All right. But on guidance, Honeywell expressed caution going forward, slightly lowering the top end of its sales and profit margin forecast due to tariffs and uncertain global demand. Okay, so there you got a negative read. They're pulling back. General Motors shares are lower after withdrawing its earning guidance. They said, we don't know. And especially those car companies have been right in the crosshairs at times. So I understand them saying they don't know. They're just going to pull guidance altogether and we get what we get. UPS backed away from its 2025 financial guidance due to macroeconomic uncertainty. Okay, UPS, so they pulled their guidance just like GM. Royal Caribbean said, they actually increased expectations for the year. So they raised guidance for the year. So that's all I really had, Mike. There are many more companies. I'm excited to read Visa after the bell. Going to be a big tell there. And then, we'll see what the rest of the week brings.
And Starbucks. And Starbucks after the bell
Starbucks
today.
After the bell.
So,
Starbucks
Visa
is trying to sell their Chinese business. Really? At least that's the rumor. That would be very interesting to see them kind of go more a lean North America focus. Anyway.
Yeah, I always like to look at Starbucks as one of, Starbucks, Walmart, McDonald's. How's the consumer doing? So that'll be a good one. And, technically it seems like Starbucks wouldn't have to be that impacted by it, by tariffs, and then of course, Snapchat, that's always a stock that's fun to watch. I never can predict whether it's going up or down. It's just kind of craziness. Probably because I don't use it, but maybe someone else does. Somebody else must use it.
Of course.
So we'll watch those. And then of course, Corey and I will be on pins and needles on tomorrow's close because we got Microsoft and Meta. So those are big ones that we really care about in our models. So with that, tariff talk will continue. I would tell people just, it's a process. Just because things got delayed 90 days does not mean resolved. We will
Is
see.
it like the eye of the storm? Like we had the front half of the storm, now we're in the eye. It seems calm, right? And then the back half of the storm.
I don't want the back half of the storm. I want the storm to blow away. I want it to be like, it really wasn't as bad as we thought. And if you look at, with the tariffs, I wish they would break down the goods that they, from China and said, hey, we're allowing phones and semiconductor chips and things that are on the more useful side. And, $12 bathing suits. Well, maybe we can do without those. I don't know. So thanks, everybody. We'll be back tomorrow with more. Have a good one. Bye.